Howdy. Welcome back to Dion Talk. Analyzing a property is one of the most challenging things that a new investor has, and sometimes it's the thing that stops you from investing. BiggerPockets calls this analysis paralysis. So what I have today is my friend Tony, who's been investing for about 2 years and has a spreadsheet that actually makes it a lot easier to analyze properties based on several different aspects. I don't want to pick on Tony, but when I have a conversation with him, I feel like I'm having a Mensa exam. Tony, in the military, was an engineer, which means not only can he build bridges, but he can blow them up too. And one of the reasons why engineers do so well in real estate is that hyper-analytical mindset on how to look at things. So when you talk to an investor like me who's been investing for 10 years, it's very lazy, it's very simple. It seems weird that I can look at a property and in a few seconds make a decision on whether it seems like a good deal or a bad deal, and I take a deeper look or I run away. But what happens in those few seconds? All of that happens on this spreadsheet. So Tony, can you bring up that spreadsheet and walk us through how you analyze what looks like a bad deal and how you helped your friend make a decision?
Well, certainly. Let's do it. As Dion said, I was a engineer in the military, and this is actually my second year in real estate investing. And with this, I've learned quite a bit. Listening to all these different webinars and all these different people, I had to come up with a process in order to quickly analyze, to understand good deal, bad deal, or even a great deal. And what happens in those seconds, I had to write down because it was not a practice for me. So once I understood what a cash on cash flow analysis looked like, I was doing it by hand until I had made this spreadsheet. And a friend of mine who went to the Cody and Christian Real Estate Summit back in December, he came into me like, "Hey, Tony, I know we talked about midterm rentals, travel nurses. I want to have you help me analyze this deal." And I was like, "Sure, let's do it." And they came up with a more particular process for this. Step one, what is your market? Everybody talks about it. People have their own markets they look at. For Dion and myself, we look in our local area in the South Puget Sound of Washington State. Millennial Mike, he looks at other places, Gary, Indiana, South Chicago, and see what those markets have in terms of their economic drivers and everything else. Step two, what value add are you looking for? How much work do you want to put into that? If you're like Dion, you want to look at long-term rentals. Myself, I do midterm rentals. Maybe you're a short-term rental guy, maybe sober living. Burr, or do you want to raise rents on those long-term rents? And then you find that property to analyze. Many different ways to find them, many different properties to look at. In this case, we're looking at 123 Main Street. For this particular property that my friend and I were looking at, it had 5 one-bedrooms, 1 two-bedroom, and then one bedroom little cottage. So this property, baseline income of doors, what you want to look at is like, how do I get that basic baseline? Everything went away. Airbnb goes away, VRBO, Furnish Finder, anything went away, even Section 8 possibly. What is your basic income that you can receive? So we're going to be looking at the Housing Urban Development.gov website that gives us all this data. Go to HUD.gov, go to About, and you want to look up the average rents. Go to fair market rents, then you scroll down and you have 2 tabs here. One is the Emergency Rental Assistance Program. From my understanding, this is the fair market rate plus about 30% to pad it to allow people who are in an emergency assistance program to allow them to find housing. However, we're looking at fair market rate rents. So we're going to utilize the fiscal year 2023 fair market rents. And for this particular area that my friend was in, it's in the state of Oregon in the county of Lincoln. And we can see for this fiscal year that these are the area rents that you can get in that county for Section 8. We've already inputted those. We can expect with Section 8, the baseline that we probably receive is about $6,841. Now, you're probably wondering, okay, what else can I get for this property? If we're going to be providing expenses for midterm rentals, we can put in those expenses.
So the thing to notice here is that if you rented this to Section 8 at the amount that they allow, you would lose $21,000 per year, which is a negative 10% cash on cash return. This is a great deal. Sign me up. How do I find this place?
I mean, you can look on the MLS. That's where we found it. But this is probably a bad deal, especially as we have gone through all the expenses parts and put in our mortgage. And this is a mortgage calculator I utilized, put in 10%, or this home value was $950,000, put 10% down, mortgage rate at 6.2, 30 years. We estimated that the property tax was going to be about $3,000, insurance $1,000, and it gave us over $6,000 for that PITI. With our cash on cash returns, it gave us a negative 10%. Not a great deal. Actually, I would say it's a bad deal and you should run away if you're going to utilize this for Section 8 housing.
So now demonstrate for us the power of midterm rentals.
Step 12, midterm rental analysis. Going back to step 2, what value add can we add to this property specifically for midterm rentals? We go to another website called gsa.gov, and this is the website that me as a government worker would utilize. And so we would go to per diem rates, have the current fiscal year, and then we would put in the location. So the state was state of Oregon, Lincoln City. We can find our rates. For this particular area, if I was a government worker traveling to Lincoln City, Oregon, per night I would receive $131. And then also I would receive meal and incidental expenses of $69. If you were to average that over 30 days, that would be over $6,000.
What I want to point out here is something that I learned from my sister, who is also a traveling nurse. But if you look at this in Oregon, October versus July, the amount that you earn as a per diem changes. So if you own a property, you also have seasonality. They're going to pay a nurse or a government worker more to go to Ohio in the winter and more to go to Florida in the summer than other times of the year. So you can actually look at your midterm rentals based on time of year and adjust your rates.
And depending upon that seasonality, you can even get more on your cash and cash returns. But we're going to be playing conservatively. We're going to play with $131 per day for most of the year, and then add meals and incidental expenses. That gives us over $6,000 per month. That is the cap for a government worker. Most travel workers or traveling nurse contracts go up almost to that cap. Not always, but mostly. Sometimes it's a little less. So you have to be considerate of that when they're reaching out to you. Another website that we can utilize to look at average rates in an area is furnishedfinder.com. They have some great tooling that we can utilize. And here we can see that if we wanted to start in July, there's only 3 particular rentals for a 2-bedroom. If we wanted to look at 1 bedroom, we'd probably see a little more. We'd see 7 results. And with pets welcome. Both Dion and I allow pets in our rentals. That's up to your personal choice. We've given our reasons. But travel nurses do love to travel with their pets. And when you allow pets, that opens up so much more to them coming to you because you allow those pets in there. And so we can see what the average rent in July would be for a 1-bedroom. As we can see, these prices are much more than the prices of a 1-bedroom for a Section 8. $900 versus, it looks like the average, anywhere from $1,500 to $2,400. Now it's a 2-bedroom. Most of these are 1-bedroom. So $1,600 if we want to use that as an average.
One of the reasons this really makes sense to do this is there's a huge difference between short-term rental, midterm rental, and long-term rental. A lot of municipalities, counties, and states, even like Hawaii, are taking away people's ability to have short-term rentals. HOAs don't allow it. Hotel chains are fighting them. But midterm rentals, anything over a month in a lot of areas, is actually considered a long-term lease.
Exactly. So there's an example of a little town near us called Steilacoom that took away the ability for anyone to have a short-term rental under 28-day stays. So there's no more short-term rentals, but you can have anything above 28 days. And most states consider that as a tenant. And so we can look at the average rents for that area and see how much that would give us. And for 1 bedroom, 1 bath, we saw it was about $1,600. And then for a 2-bedroom is about $2,400. We go to the next page and we can see from the previous that it was $903 for 1 bedroom, 1 bath, $1,163 for a 2-bedroom. If we go to the Furnish Finder, utilize those, we can see there's a dramatic change in our cash on cash flow, that from 1 bedroom from Section 8, from $900 to $1,600, and then a 2-bedroom, $1,163 to $2,400. And then because it's a cottage, we're saying it's going to be a little bit more. It might have its own yard so the people can have their own space to have their pets in, $2,600. Keeping everything the same for expenses, PITI, and then also furnishing costs. So you might have some furnishing costs plus reserves you might have to get from a private lender or your own reserves that you have as well. And we can see there is a large difference in our cash and cash return.
Right. The thing to take away here, Section 8 probably pays a little less than what you can find on area average if you go to Craigslist, Facebook Marketplace, Zillow for regular long-term rentals. But if you were going to lose 10% on Section 8, you're not going to make 16% like you will with midterm rentals.
Exactly. Now, like I said, this is just what value add are you looking for and how much energy and time do you want to spend in this? Me, I'm a little bit younger. I have lots of energy. I have the adaptability and the eye to personally design my own spaces. I've done it for a couple of friends. I've done it for my own space. Took me about a month to do it physically by myself. Takes a lot of work. But also the cash and cash returns is a little bit higher. Also goes with a little bit of work of marketing, reaching out to travel nurses, responding to requests at all times of the day, being there for your tenants or your future guests to do a video call for that space. There are a bunch of websites and or Facebook groups you can join that have tons of information and tons of space, and even books out there that can specifically talk about midterm rental space, what nurses want, what they're looking for, and other people that are midterm rental travelers, not just travel nurses, but maybe that millennial who is remote worker like I am, who can go anywhere in the United States or even across the seas to work remotely. And I've had a couple of those as well. Or people that are in transition. They're moving from one location to a next, and they reach out to you as well. I've had a couple of those. This deal went from a bad deal to a great deal very quickly, if you know the steps and you've been following. And I could share this spreadsheet with those who would like to have a copy of it so they can utilize it in their own step-by-step process for analyzing midterm rentals themselves.
Awesome, Tony. Thanks. I appreciate that. And if somebody wants to reach out, what's the best way to get a hold of you to maybe get a copy of this spreadsheet?
The best way to reach out to me is reaching out on my Instagram on TonerTony84. You reach out to me saying, hey, I saw you talking to Dion. I want a copy of that. Send me your email and I'll send it to you.
Thank you. And someday I'm definitely going to have you teach me how to blow up a bridge. But not today. Thank you so much. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.